CME Group launched Micro E-mini Futures Contracts. Discover how a smaller Micro E-mini Futures contract opens the world to greater trading possibilities.
Welcome to Market Movers. I'm Jim Uriel with Scott and Martin.
Hi, Jim.
Okay, so now it's about that time again, earnings season. And you know, the kickoff really is Bank Week. Between the 15th and the 18th, we have Citibank, Goldman, Morgan Stanley, Bank of America. Is it a big deal? How big a deal? Put it in perspective.
It's a big deal if we get some good beats this time, Jim, because banks have been lagging most of the year. In fact, they've shown over the last, say, several earnings seasons that they've come in kind of unexpectedly low, let's say, or let's say missing earnings. So if we get some good numbers out of the banks this time, that could lead us into a good earnings season.
Do you think there's been this pattern that we've seen in the past of job owning earnings expectations lower and then just seeing a bunch of beats? We're going to see that through this earnings season?
I think so. But here's the tough thing about this earnings season versus even last quarter and the quarter prior. Now we've got tough comps coming in, too, with some of the tech sector. So that's another thing to watch, is if they job own down, does the market take that badly as they miss and don't beat?
Understood. Now, before we dive into our trade discussion, I'd like to point out that these are examples, not recommendations. When we price these out, we're talking about the E-mini and the E-micro S&Ps. They're trading about $29.96.
$29.96, Jim. And we saw 3,000 in the S&P today, my friend.
We did.
So very interesting and actually a very significant breakout, in my opinion, too, based on what we saw from Chairman Powell this morning.
Oh, my gosh. Yeah.
So as an example today, Jim, I think there's a way to take advantage of that. The week 3 30-25, 30-50 call spread in the ES are about 4.5 ticks is the trade example I want to give you. This trade risks about 225 to put on to make potential 1025. However, I'm going to help pay for this, as I like to sometimes do when I find some other value, say in the charts and prices. So I'm going to actually sell an outright put, 29.50 outright put for about 4.9 ticks. So we could call this about even for the pricing of the call spread and the selling of the put there. So the risk, though, here is that I'm getting long at 29.50 if the market drops down there and I get executed on the put.
And I like this. This is a very clear bullish strategy. The risk is definitely being long at 29.50, but traders take the risk as long as you understand what it is. You could be naked long there. I think this is a valid way to
and it gets you through Bank Week as well. So if we see some good earnings there, you could obviously have the call spread fill out.
Okay, I'm going to also come out with a bullish thing too, and it's going to be in the micros. I think micros are interesting in earnings season now too, as a way to create a little extra exposure to the two binary events of earnings season, which is Bank Week and Tech Week, or to maybe take some off the table if you think you have a lot built into your position there and don't want to risk it going through it. So I'm looking at buying the micro, the SEP micro at 30.02 on a stop. That's about 6 or 7 ticks above where we are now. A stop in with a target of 30.52 and a stop out of 29.72. It risks 150 to make 250. We've been talking about these for a couple of weeks now, and they seem to be working. Thoughts?
Yes, they're working well on your side, that's for sure. These stop-ins are good because you can target levels, and that's what I like about it. You can target levels, you can target risk, and as you mentioned in the lead-in there, you can use the micros to hedge out certain things at certain prices if you've got too much exposure on in the bigs or the minis.
Right, and I know you could always do that with the minis as well. But the micros seem to open it to a different level of investor who looks at their bank portfolio, and banks make up 14% of the S&P 500, a higher percentage of the Dow. And when those are happening, if you say, I have too much exposure to that going through this binary event, perhaps I short it a little bit now, see where the dust settles, and then reconcile my position after.
Absolutely, and the micros are a great tool to have on board now with the earnings season ahead.
I hate to sound like such a cheerleader, but I really like them so much. Yeah. Thanks for joining us on Market Movers. I'm Jim Uriel, where we are helping to make you a better trader.